All right, we can see actually the market's doing a little bit better here as we're up 50 points right now on the Dow after having been down earlier this morning. You can see S&P 500, NASDAQ all in positive territory, all happening as the president doubles down on his America First trade policies, tweeting in part, "Economy has never been better. Jobs at best point in history. Fixing our terrible trade deals is a priority and going very well." Joining me right now, our very own Ashley Webster here on set and portfolio manager for Brandywine Global, Jack McIntyre. Good to see you both. Ashley, starting with you.
Yeah.
How are you seeing investors wrestle with this whole trade equation?
It's difficult because, on the one hand, yes, the president is right. Jobs are looking great. The economy is booming along. Corporate profits are great. But there's still some tension. I'm sick and tired of this battle between all of that and the trade tensions, which still go on. I found it interesting that the Chinese lash back in their communist newspaper saying that, President Trump is a street fighter. He won't win. We're in for a protracted war. All bad things to say, not giving the market any sense of calm at all. Having said that, do they get a deal eventually? Yes. I'm interested to know, is this going to start showing up now? Are we going to see downgrades for maybe some corporate outlooks if this trade thing continues to carry on? Are we going to see a disruption in the supply chain around the world? German factory orders were off 4% in the last reading. That's unheard of. So are we now starting to see a little bit more tangible the impact of what's going on in this trade war?
It's a good question, Jack. I mean, I think up until now, and even still now, investors are basically saying, yeah, we don't really think a trade war is coming. If it actually does hit, it wouldn't be any fun for anybody. Although I keep making the point that we have the upper hand should we decide to go there in a very serious way. But Jack, what does it mean for the stock market, and how are you as an investor wrestling with this threat right now?
Right. So, yeah, obviously around the trade situation, the escalation of tensions and things like that, it's the uncertainty around that because we just don't know where things are going to go. I think the equity market is benefiting from this huge amount of fiscal stimulus. It takes maybe 4 to 5 months to implement tariffs. So the equity markets aren't quite focused on the potential trade war. And again, maybe this is just negotiating. We've made some progress,
That's what the market
with our
seems to
traditional
think.
allies.
Right,
yeah.
Jack? I mean,
China's going to be a different story.
And I want to back up for a minute. Typically, the market's trying to predict what is going to happen 6 to 9 months out, right? That is how investors are always thinking. So sometimes you get a recession. True. But a recession might show up in the market first, or indications that things could start getting bad. Right now, everybody's confidence level is pretty darn high. So, if they're that worried about a trade war, it's certainly not showing up now. So, Jack, does that lead you to believe that the majority of investors are saying, okay, this is just his negotiating style?
Yeah, I'd have to say there's certainly some complacency. I would look to the yield curve, though. I'm not sure there's complacency there. There's something going on, whether it's a little bit of a growth concern or not. The bond markets aren't worried about inflation. But, yeah, you're right. When you look at the equity indexes, hey, there's a lot of complacency. But then again, the economic data is actually good. Global trade is doing okay right now. This is right, forward-looking. We've got to make some assumptions, which I know you're not supposed to do, but as investors, you've got to either say we're going to make some progress or not.
Yeah.
So,
I mean, and that's, and people feel like we're making progress and we'll continue to make it.
So far, so good on the economy, let's be honest. Interesting, though, China, by the way, is now pumping liquidity into their banking system. Banks are now being told you're going to have to hold X amount of cash on reserves. It is having a big impact there. Certainly the yuan, we know, is weakened and weakened and weakened. And we can win the long game, even though China is famous for playing the long game in everything. We do hold the upper hand.
It's going to hurt. I mean, we are there. They need us, Ashley.
They do. And we need them to a certain degree, but maybe not by as much.
Well, that's, I mean, are you doubting that, Jack?
Yeah, maybe.
I do. I think, in terms of, hey, it's a global economy. We benefit from global trade. China has a huge footprint, emerging markets in general. We're not there today. The Fed's not worried about what's going on with China and EM. But if things deteriorate, if the U.S. dollar continues to power ahead, in the near future, they'll start talking about the concerns over a strong dollar.
Concerns over a strong dollar, yeah. No, it's always something that comes up. I mean, there's a part of me, though, that kind of likes the idea that if I go to Europe on vacation, I actually have a shot at having a decent vacation.
Especially with the
right?
pound diving.
I remember when we used to get a discount, and those days have been, when I got married, do you know this? And I got married in Europe, in Italy, back in 2001. It's about 15% discount. The euro had just sort of been coming into action there. And
not anymore.
Not anymore, but, you know, hey, we might be getting back there.
It worked the other way for me. I remember getting $2.80 for every pound in the early 80s. How great was that?
Pretty darn nice. Yeah. All right, well, it's good to see you. Jack, we hope that the market continues higher. And Ashley,